Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Kickstart video to start your trading week. Today is September 9th, 2024. In the Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective. So let's get started. All right, looking at the euro versus US dollar. Friday, we had the unemployment data come in the US, and the market was very volatile right after it, and then for the next few hours after that, the high price did extend above this swing area and above the moving up to a high of around 111, I don't know, 50-ish or so, thereabouts, and then rotated back to the downside. We fell above and below the 100 and 200 hour moving averages through here after another run to the upside, stalled near this swing area through here. We've rotated back down and closed just below the 200-hour moving average. Trading here today, we moved a little bit higher above that 200-hour moving average in the early Asian session on a quiet opening, and then started a rotation back to the downside where we've been moving lower since then. Now, of interest on the downside as well is this 38.2% retracement. I meant to put a line, but I put an arrow instead. You can see the 38.2% retracement is of this move to the upside right through here. And in trading, I guess that's last week, the market came down to the 38.2% retracement on, what is that, 1, 2, 3, 4, 5, Monday. Found support buyers, moved higher, then broke below the level on Tuesday on a number of different occasions here. That should have sent the price lower, but we instead bounced back and tried to stay in this channel through here. On Wednesday, the price again moved back above the 38.2% retracement, moved up to the channel trend line once again, found willing sellers, but this time we found support buyers against the 38.2, and that ultimately led to our rotation to the upside that led into the volatility that we saw on Friday's trade through the jobs report. Now, in trading here today, we have moved just a little bit below that 38.2% retracement, as you can see, and we are currently trading just below it as well. So the market's trying to make a play below that 38.2. We'll see if it can get and stay below that level. That would open up the door for further selling. I have earmarked this 110.16 level, but ultimately the 50% retracement here at 1.09889 would be another key target. You might add the natural support at the 110 level as a potential support level on the downside. Conversely, if we end up continuing to find buyers, and in the last couple hours we are trying to slow the fall against this 38.2% retracement. We're right above it. As a matter of fact, right now 110.40. If we do see more upside momentum, watch this area right through here at 110.64, and then the 100 and 200-hour moving averages up here. Those levels are now near converged now, and that should provide resistance on any sort of move to the upside. Let's take a look at the dollar versus yen next. Let's focus again on the hourly chart and taking a look at Friday's price action. Lots of up and down volatility as the markets see different views on whether the employment number was strong, weak, in between, and what the yields did, and so on and so forth. So what we did see, however, is that as the day wore on, yields moved lower. We saw the price move and settle lower on the day. However, note the low price going back to early August was near the low price that we saw on Friday's trade, so there was support buyers against that level. The other area that I had earmarked is this swing area through here, and on both Thursday and Friday we traded above and below it, and in fact in trading here today we've traded above and below it as well. But what is different today is that the falling 100-hour moving average also came into play here at 143.814, and that seems to have put a lid on the dollar versus yen on the rotation back to the upside and trading here today off of this double bottom down through here. So we have set the stage now for the battle. The battle goes on between the 141.67 level and 143.81. That's a whole 220 pips. So this, what it seems like just up and down price action is, pretty wide trading range here. But sellers against the 100-hour moving average have been rewarded with a rotation back to the downside, and they feel more comfortable as long as the price can probably remain below the swing area. That is the best case scenario. Traders would like to see the 143.39 now hold the ceiling in trading here today and keep the rotation back to the downside. If they can do that, that'd be good news for the sellers in the dollar versus yen. But obviously, we are trading more to the downside here. So the buyers need to prove that they can take back more control. How do they do that? Get back above the swing area, get back above the 100-hour moving average. If they can't do that, they are not winning, they are losing. Finally, let's take a look at the sterling versus US dollar. And what we saw on Friday, once again, is lots of ups and downs. We did move above the swing area here briefly between 132.21 and 132.30, only to rotate back to the downside. And as you can see, we closed below the 100-hour moving average, below the 200-hour moving average, blue and green lines in this chart. In trading here today, unlike the euro versus US dollar, we saw a move briefly above the moving average level. We did find willing sellers against the 100-hour moving average, which kept the sellers more in control. We moved below the 100-bar moving average on the 4-hour chart, increasing the sellers' bias, and also broke through the low prices that we saw in trading last week, which is all good news for the sellers. What would be a risk-defining level for traders would be the 100-bar moving average of the 4-hour chart, currently at 1.3416. If we go back above that level, then things might shift a little bit more to the upside. And even if we get above, start to see more momentum above the low from last week, that might get traders' attention, at least in the short term, as the market tries to figure out what it wants to do this week. On the downside, the 38.2% retracement of the August trading range would be the next key target. We haven't really approached that in trading since peaking. That level comes in at 130.36. So be aware of that. If the momentum should continue, that would be the next key target on the downside for the sterling versus US dollar. So there you have it. I'll look at 3 of the major currency pairs to kickstart your Monday morning US session. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.